Okay, so let's start. So what I'm gonna do in this video is an analysis from the start. I mean, from the beginning, and based on liquidity concepts. Yeah, so I will make you understand how I do the analysis from a blanket chart. I mean, I trade British pound, but I scalp, and from the sake of make you a learner, basically I will do top-down analysis from the monthly and weekly, daily, and maybe on the one or let's see. Okay, guys. So let's start. Now I will choose a pivot because if I start from here, it will become very long. This video. I mean, the concepts are the same. So, how we start from this top, from this, yeah, 2007 top. Okay. So basically, what we did here is they pair me the top, and this was the break structure. We broke the structure and we took the external liquidity. Okay. Okay. And external taken. Now. Okay. Now we took the external liquidity. Now what do we have to do? We have to take the internal liquidity. And the internal liquidity basically is in between this range from here to here. So the internal liquidity will be inside this. Okay. So the first concept is this one. Now my second question is, but where will the market take the internal liquidity? Where? From the area of interest. Now the area of interest in this case can be in a fair value gap, this one, breaker, or an order block. I mean, these are the point of interests where the orders get mitigated. And on my previous video, I also told you guys that the market will take the liquidity from the nearest liquidity area possible. Okay, so now the market was very sharp here, that it dropped to take these lows. Yeah, liquidity resting here. Okay. And so the nearest liquidity is, so if we go up and look the left, the nearest liquidity is here, because here is, this is a breaker. This is where the, let me show this one. This is where the smart money bought and made the top. Okay, so this is the breaker. Okay, so guess what the market is. So the final market, the place where it took the internal liquidity was this point, which is the breaker. Quite simple now. I mean literally you can take this position. I mean, the placing stop loss here. I mean, you know that the market, after taking the internal after taking the internal, to take the external which are below these lows, so you can target even these lows, and you will make a lot of profit, man. A lot of, I'm swearing. Okay, so internal liquidity. Now the external, as I said, the external will be below these lows. Okay, and now internal again, internal, now then external, and now what is the market is taking now currently? The internal. So the market is now currently taking the internal liquidity to move maybe further down. Maybe, I said, because on the monthly chart I have two options. The first option is this: the market is taking the internal liquidity and down and rejecting from this breaker. I mean, we are in a critical situation here. I mean, a critical points. Okay, it's a decision point. Basically, you can predict. I mean, on the way based on some concepts where the market will take the liquidity. I mean, if it'll break or down, depending on the, even on the macroeconomics. But I will do a video further. Okay, so my first option is this one. So we'll take the internal equity, which will land here, and then down to take the external, which will be below this loss. Okay. So my first assumption is this one, and my second one is that the market will do come on man. Okay, the second assumption is that one, the market will do a break structure. Yeah, I mean, it's quite difficult in this situation because you know what I think. I have another thing in mind. I mean, I don't like trend lines, but I like liquidity trend lines. Okay, so I don't know, but this is my gut feeling. I just make you understand my two views, which are internal liquidity and this one, the breaker, which is a kind of reversal, which can happen. I mean, I don't know. This is liquidity trend lines. I mean, orders are resting here because I mean orders are pushing down below the price. Therefore, selling orders will be resting here, and the stop loss will be above this one. I mean, retail investors or traders recognize this trend line as a strong group support between because it is making 3 touches, 4 touches. I mean, those kind of shits. Okay, so let me make something clear. 1 second. So I just make you spot this trend line. I mean, you know, I mean, you can already know about these trend lines. Okay, and I am visualizing is the market will reject this from this breaker because this money bought here and basically bought here and the market reversed. Now the mitigation will happen here, which is currently happening. And yeah, by seeing even the index market, I mean the S&P is just on the verge of reversing. So I'm visualizing something like this one, and I don't know because this trend line is to break for some move. I mean, yeah. So I mean, for a British pound, this is my analysis. Quite simple. I mean, it was smooth to the point. I really hope you guys understood. And okay, let's end this video. I mean, British pound is a multi-year in a downtrend, multi-year. From I mean, this chart is letting me the data from 72, yeah, 1972. Nice. And yeah, I just one last thing. I just want to make you aware about this law. We just took the liquidity from this low. Look at this. We made a swing failure pattern here. We took the orders resting here, and basically this push up was very, I mean, natural is a natural reactions of what I mean. The orders get triggered, and we have this kind of reaction. But I mean the thing is that we took liquidity from the 85 low, which is interesting. I mean, very nice. Okay guys, bye bye and see you in the next video.